Here's 3 ways you can reduce your monthly payments when your mortgage comes up for renewal. It's no secret that if you signed a mortgage in 2020 and it's coming up for renewal in the next year, you are going to be facing an increase in both interest rate and monthly payment. If you're worried about those monthly payments, here's 3 things you can do. Firstly, your bank's going to send you a renewal notice with a rate on it. Call them back. Say, can you do any better? Better yet, don't just call them back. Call other banks too. There's other banks in town who might be able to better that rate for you. Or call me. I have access to a number of different banks, and I can do that for you, and we can look at it and see if there's a better place for your mortgage. At the end of the day, if your existing bank is the best place, then you should stay there. But let's have a look at it. Second thing you can look at doing is refinancing. If you got a $500,000 mortgage in 2020, for example, and let's say your interest rate was 2%, and 25 years, your mortgage payment was probably around $2,100 a month, $2,117. But now after 5 years, you only have 20 years left on your mortgage and only $418,000 remaining, but the interest rate is going to be up. Let's say it's 4%, but you're looking at a mortgage payment of about $2,500 a month. So it's gone up $400 a month. Look what can happen if we refinance it though. We take that mortgage, that's 20 years, and we amortize it back out over 30 years. Well, that drops your monthly payment to $1,990 a month, even less than you were paying now. Now, nobody wants to take longer to pay off their mortgage and pay more interest, but if it makes the difference between struggling every month and not struggling, well, then you can decide what is right for you. And remember too, just because you're setting it to 30 years now, doesn't mean you have to take 30 years to pay it. If you find you have extra money every month, because things are a little easier now, you can put that extra money into the mortgage as prepayments, making it get paid down faster. Remember, the equivalent of about 1 extra monthly payment per year, every year, takes about 2 years off of the life of the mortgage. And if you can put more in as well, then you're going to pay it down faster. A third thing you can think about doing is consolidating as part of that refinance. Maybe it's not just your monthly mortgage payment that you have, but you also have other debt. Maybe $10,000 sitting on a Visa, $15,000 sitting on a MasterCard. So your monthly payments are actually your mortgage payment plus another $750 a month. So without doing anything, you'd be looking at paying $3,200 a month. Well, those debts could be wrapped up into the new mortgage as well, because remember, your home has been appreciating this whole time, so it's been building equity. So you could actually take those debts, wrap them into the new mortgage, refinanced over 30 years, and bring your monthly payments down to just about what you're paying now, the $2,100 a month. So all of a sudden, you've taken all your debts, you've made them into one single monthly payment, and made your life a little bit easier every month. And remember, if you have extra money every month, you can throw that into the mortgage. So the more you can do is prepayments, you can pay that mortgage down faster, but you're only committed to that 30-year amortization. Anyway, if you have any questions or would like more information, please give me a shout.